The financial statement represents the window on the firm activities, and accounting analysis is required to determine the quality of information provided by that same window. Good evening, Passenger. This is your classmate speaking. Please fasten your seatbelt because we are going to present our KSP analysis from the class case.
So the first question asks us to make a 10% adjustment to one of the accounting policies. So we have chosen to adjust the unearned revenue. So when unearned revenue is adjusted, information in the firm's balance sheet will be changed. In this case, if unearned revenue is increased by 10%, the total current liabilities will also increase by the same amount. Likewise, cash of the company will rise by the amount of unearned revenue increase as well. And as there is a change in current liabilities, the financial ratio of the company will also be altered. Under this circumstance, if the unearned revenue is rises, the quick ratio would be lower, affecting the firm to have less ability to repay short-term debt, and it goes the other way around for decreasing the unearned revenue. And another effect on the unearned revenue adjustment is on the cash flow statement under operating activities. And in this case, as the unearned revenue is rising by 10%, the cash flow from operating activities will be increased by the same amount as well. The effect is vice versa for the 10% decline situation. And moreover, since current liabilities are part of the working capital, an increasing balance of unearned revenue reduces the company's working capital. If a company overestimates its working capital by not making adjustment for unearned revenue, it may experience cash flow problems in the future.
Next is the effect on the income statement. So if the service has not been provided, nothing will change on this. However, if we assume that the flight tickets are used as the 10% amount of the revenue, this amount will transfer to the net capital revenue account. Therefore, the total revenue will increase by around 2%. And assuming that the variable cost increased by the same portion of the revenue and no fixed cost increase, the total expenditure will increase by 1.60%. This will also lead to an increase in the pre-tax profits, as well as the tax expense for the year. Therefore, a 10% transfer of annual revenue to the actual revenue account will result in the company's additional revenue.
Moving on to the second question, one of the things that should be closely watched in the airline industry is how they record the impairment of assets and related cost accounts. To give you a clearer understanding of what it is, imagine that you guys own and operate thousands of commercial aircraft, and suddenly someone comes in and says that you can't do that anymore. Your plane operation has to be halted, and this is exactly what happened to Qantas A380 aircraft, and that someone in this case is the COVID-19. In a short period of time, Qantas A380 aircraft valuation plummeted by the recognition of impairment loss on the aircraft. This also happens to Qantas other assets. According to the AASB 136, impairment of assets required assessment at the end of each reporting period as to whether there is any indication that the asset may be impaired. And if such indication exists, the entity shall estimate the recoverable amount of asset, and the recoverable amount of an asset is the higher of its fair value, less cost of disposal, and its value in use. And as you all can see, the formula to calculate impairment loss is asset carrying amount minus by its estimated recoverable amount. Some of you might have already noticed the tricky part in the calculation, right? And yes, both of those calculation approaches can be manipulated by Qantas management team. For the first one, the group can make adjustment on third-party value less cost of disposal valuation by adjusting for the level of maintenance life remaining on the asset. And in this case, it is its aircraft. Second, the group can make adjustment to value in use valuation by adjusting its estimated RAP in the calculation. And unsurprisingly, impairment of assets account was firstly reported on Qantas financial statement in the year of 2020, the first year after COVID hit. And to look further into that year detail, the total impairment of assets accounting up to 1.4 billion Australian dollars. Most of it came from the aircraft and the PPEs, which can increasingly be more impaired in the upcoming year, considering that COVID will stay with us for the next few years. However, in 2021 and 2022, Qantas reported impairment of assets dropped by 81% and 97% respectively from the year 2020, which is a significant drop considering the pandemic is still going on across all Qantas operating regions and technological advancement continue to rapidly improve. And these are the reasons why the way that airline company record its impairment of assets should be closely watched by both analysts and accountants.
So now we'll be moving on to question 3. So first, we'll be looking at the accounting standards. So we have compared and evaluated both 2019 and 2022. The financial statements of Qantas have been prepared using the Australian Accounting Standard and adopted by Australian Accounting Standard Board and the Corporation Act 2001. Not only this, it also complies with IFRS and IFRS integration adopted by the International Accounting Standard Board. In the end, the same standard was used in 2019 and 2022. However, there were a few notable changes in the accounting standard. In 2018, the impact of ASB 15 revenue from contracts with customers were restated. In 2019, the impact of adoption of ASB 16 leases and the IFRS in relation to fair value hedges was restated. And lastly, in 2021, the impact of adoption of the IFRS decision in relation to cost computing was restated.
Moving on to the revenue analysis, we have found that the accounting policies for revenue recognition between year 2019 and 2022 are the same. The airline has been two revenue sources, which is the revenue from passenger and the revenue from freight forwarder. This revenue is recognized based on an accrual basis, which means that the company will record the revenue when its cargo or goods is provided. As mentioned earlier, the revenue recognition policy between these two are the same, but why the record amount so different? The company has faced a significant decline on its revenue, and as everyone can guess, the factor behind its financial trend is the COVID-19 pandemic. To cover some of its losses, the company decided to shift some debt to transporting cargo, resulting in a significant growth on the freight revenue section. However, this didn't cover the revenue loss on the passenger revenue section, which has decreased from more than 60%. More for the recognition policy, if the flight tickets are bought but not yet being used, like the passenger haven't been uplifted to the sky, the company will record these as a revenue received in advance on the current liability section of the balance sheet. And if the customer makes a ticket refund, the company reduces the revenue received in advance and classify those refund amount as receivable. By applying all of these policies, the company's practice for revenue recognition is considered conservative.
Okay, so moving on to the analysis on staff costs, right? So as you can see, back in 2019, the staff related costs were very exceeding, at the around almost $4.3 billion. This is a lot. It ranges difficult to reduce the workforce due to redundancy. And apparently there's COVID-19, and the costs were driven down to $1970 billion to 2021. And later in 2022, the business recovered, and the staff-related costs went back up to around $3 billion, which is like a 53% recovery rate, from the previous year, remaining at the most significant expenses category for more than consecutive years. On the other hand, as you can see below, right, the staff redundancy expenses were down significantly to only like $5 million, reflecting that the plan to reduce the workforce is now realizing that there was a recognition of redundancy provision during this period. So, although the redundancy expenses were greatly reduced, the provision as the balance sheet amount to $189 million. This indicates that there were additional employee benefits given out during near the end of the June 30. And finally, like competitors in the same industry, accounting policies for staff costs are quite conservative as usual. There are policies for accurately estimating each type of provisions, as well as the instructions for adjustment needed in the event of measurements and lighting.
So let's move on to the depreciation. Let's start with the property plant and equipment of Kansas. It recorded at 10,000 million. As we can see from the table, although the depreciation of 2022 decreased from the previous year at $1,800, it was down only slightly from 2021 when the figures was 1,872. So aircraft and engines are still the most significant depreciable asset, amounting to 52.02% of total assets at June 2022, which indicates that the depreciation expense of Qantas is remarkable because it barely comes from the P&L. And in part of residual value, next slide please. Okay. So by adopting straight line method of depreciation, tanks and equipment are depreciated over a period of 2.5 to 20 years, as we can see with a residual value of 0. And for a future aircraft and engines with the same period of 2.5 to 20 years, its residual value is around 0 to 10%, which compared to the Singapore line that uses the same straight line method of depreciation, that future aircraft assets are depreciated over 15 to 25 years, with a residual value between 0 to 20%. So, even though the depreciation is significant, Qantas accounting approach is still less conservative than those of other companies in the aviation sector. And it also gives the airline significant latitude in this area of its accounting policy. And lastly, due to the impact of widespread of domestic lockdown of COVID, particularly in the first half of 2021 to 2022, the depreciation was below the level of 25.54. Moving on to the blue price rate, as picture Australian dollar against Philippines are equal to unfavorable US dollar dominated and foreign currency competition, and due to the economic competition, airline must give the high price, which they cannot reliably pass on to passengers. And as the oil price has likely over 80% in the aviation, further and then expect the price to rise further as United States consider a ban on Russian nuclear import. Moreover, Qantas or shifting contractor expire, which might for the airlines to their ticket price to cover the burden of work costs, placing them at competitive disadvantage. In addition to qualitatively reviewing the adopted accounting policies that we have mentioned so far, quantitative analysis of the resulting financial information is also important. This may involve consideration of income, cash flow, revenue, and items. Presented in the graph above is NOPAT and operating cash flow for the period of 2013 to 2022. This has shown that there are positive operating profits throughout the year 2016 to 2019. However, the operating profit has been declined sharply to negative 1,964 million in 2020, highly due to the pandemic, but has slightly rebounded back in the following years. While in the same period, cash flow from operation was less volatile during the period of 2013 to 2019, although it still recorded substantial variation. Though the significant changes were apparent from the year 2020 onwards, as a result of the pandemic, cash flow from the operations became more volatile, with a number plummeting from 2,807 million in 2019 to a 10-year low of negative 386 million in 2021. Nevertheless, the cash flow recovered strongly in the following years to 2,670 million, driven by a strong reboot of passenger revenue received in advance. As for the quality of earnings, the close association between NOPAT and cash flow from operations can be suggested that earnings are of relatively high quality throughout the years. However, Qantas' earning quality was considered quite low in 2021, since the NOPAT and cash flow from operations went in the opposite direction. To summarize, revenue and impairment of assets can be considered the two key financial reporting areas affecting the company's annual financial statements, including the balance sheet and the statement of cash flows. Along with the qualitative analysis and quantitative analysis, such as the association between NOPAT and operating cash flow, can help assess the financial health of Qantas. Moreover, concerns regarding hedge
that is being expired and financial instrument expenditure can be the potential to distort reported performance. Hence, these accounting practices and the related no disclosure should be subject to careful scrutiny. Thank you for your attention. It could be a conversation.
It depends on like yeah, the revenue retention, whether it is like from a policy or cash.
Question. I have a question also about this, like confusing thing about the unearned revenue. For me, is do you think that unearned revenue for Qatar Airlines is good or bad? Yeah, I mean, if the unearned revenue increase, maybe you have to forecast what the liability of the company is also increased. Also, so in that way, in the airline industry, at the moment, the financial of many companies is already pretty bad. So if the liability increase, will it affect the credit rating of the company? And if that's so, it will also affect the interest rate. So if the unearned revenue is like money you get from the customer, actually good or bad?
Very good question, Harry. Okay, so to answer that, I think it depends on the year that the financial statement is reported. For example, if there is a unionized by our employees, we might report it a low income, or may our liability high, may our negotiation power more than other employees. And also depends on the executive tenure. I think depends on like if they stay like they just came in or they have stayed at the company for a long time. As we can see from the case from the part B, or maybe part A, I think part B they mentioned a lot of CEO switch. Yeah, and each of them executive have a different approach. Some are conservative and some are aggressive.
Output and the Home Depot. Yeah, we do the Home Depot.
So, do you think moving to the quantitative analysis, do you think that would be like any explanation to the different direction for the NOPAT and cash flow for operating? in 2021?
What was your question again?
Do you have like what do you think about the different direction in the 2021?
I think they're selling their asset off. That's why they have like more higher. That's why they have like higher profit. But like so the cash flow from operation in 2021 is lower. We think that's because of the pandemic. But then like since they're selling off their assets, the profit is increased. That's why their earning quality is low compared to the other years. Does that answer your question?
Next slide.
Okay, so I think I shouldn't be sitting here. I feel like so small. I'm small, but I feel smaller. So next group, I think there was a group that needed to vote. So what do you? Some people. Okay, so I'm going to move away.
Okay. Good evening, guys. We are from Group Home Depot. What are we going to talk about today? So today we're going to talk about the first question and the second question of the case A part B. Let's start with the first question. For the first question is the same question with everybody else. So the answer that we answer is the revenue recognition practice, which have the things with the unearned revenue also. Okay, so let's talk about the unearned revenue a little bit. Why the revenue is very important for the every airline industry? First of all, it's because the airline industry, everybody is operating in a very thin, like very thin margin. So the revenue recognition have like some big impact on many things, like the earning per share, also the interest and the tax that you have to pay. So the revenue recognition practice is very important for the airline industry. One of the reasons that we have to practice the unearned revenue also is because if we use like the customer pay us and then we recognize as revenue at that moment, it would be very hard if it's like they not get on the plane or something like those return sales allowance. Something is very confusing and very hard to estimate at first. So it is very important to use the unearned revenue. It is one of I think it's the best practice for every airline company in this industry. So what will like increase in 10% of the unearned revenue and decrease 10% of unearned revenue affect the company? It will mainly affect two things, which is the income statement and the balance sheet. First of all, if the customer buy the ticket, this will still not affect anything on the income statement because those money that get in our company, boom, it comes in with cash, but those cash are still liability. But when they use our service, when we already provide the service, those other revenue that we get, it will decrease. Liability decrease, cash remain the same, and those things that decrease, it go into the equity part. So when it decrease 10% or increase 10%, it will affect the liability and equity in the balance sheet. And when it decrease 10%, it means that we can recognize those things as the revenue. But when it increase 10%, we still do nothing in the income statement because it's still an unearned revenue. So that is pretty much our thought process on the unearned revenue. Let's go to the next question. So these are numbers. I think everyone gets the same number. Okay, so the question 2, apart from like the accounting policies that I just talked about, what are like the policies that accounting people or even the analysts need to be like focused on? We have to 3 things. Really? Yes. What is the first one? The first one is about the intangible asset, which we choose goodwill. Why indeed goodwill? Okay. When you are a company and you purchase another company and the price that you purchase is exceeds the net fair value of that company, we record it as a goodwill. Yeah, for example, if people, yes, and we buy for 3 billion. Okay, 3 billion. But the asset is only 2 billion. How much is the goodwill? The goodwill will be 81 billion. Yes. That's why it's very important to like keep an eye on. Well, can you go to the next slide? So in airline industry, there is a huge amount of goodwill on the balance sheet of many airline companies. By other subsidiaries always. Yeah. So this is why we should keep a closely look in the valuation of this asset that we acquire. So normally in the goodwill part, I think in the accounting rules of basis that you have to review it every year at least one time. For your information, in American top 5 airlines, value of the goodwill is 20.5 billion. Yeah. If we like miscalculate, it is going to be like a huge problem for us in the future. If we like miscalculate this year and next year, if we like, oh, you miscalculate last year, those amount of goodwill, it will affect many things in the financial statement. So it's very important. And the next thing is about the capital and reserve. As we have learned, every time that the company decides to issue new shares or when it like issue new shares or buy back the stock, it will affect the earnings per share. So I think this one, the company need to be clear also when it do something of like this kind of implementation, because it will affect many things. And if it's not like declared to everyone very clearly, it can be like confusing for many people, both like accounting or the financial analyst and also investor, everyone. So these things also need to be very like to put some effort to watch on. And the last thing that we have come up is for the Qantas is about the leasing, because Qantas, many of it plane it leased from America, USA, and for this, because of it leased from another country, the first thing is the exchange rate. It may affect like the volume of the lease expense, so it needs to be updated frequently and need to be closely watched. And also the account may like this activity can affect the company cash flow also. So cash flow is also very important if those two. So these are pretty much the main idea of the thing that we have done for our like case. Anyone have like Q&A? Question? Yes.
So when you were talking about and you said that if you misunderstand,
Yes.
you know,
So I think the one that is very important is that if you like, if you know that you are going to buy this company for like 2,000 billion, 2 billion, 2 billion, they are not going to sell it to you for 2 billion in the normal circumstance. So most of the time you have to pay like more amount to it. And if like someone in your company, okay, we calculate this company surely 2 billion, but and we purchase 3 billion, but next year someone comes in and like watch everything about that company that we buy and we just realize that, oh, it's not actually 2 billion. Many of the assets may like already like they may do some depreciation policy like to have their like have their asset to be like more than the value, the reality of the value. Maybe it's like only 1 billion, but we purchase for 3 billion and we think that would be only 1 billion, but actually we pay more amount. So that would be like the problem. In at first, prior to purchase, we don't take a good look at everything, the depreciation method, and also like the cost of many intangible assets also of that company that we want to acquire. Any more questions? Yes.
So for question one, you said like two scenarios which the unavailable is like plus 10% and
Yes.
10%, right?
Yes.
What do you which scenario do you think is more likely to occur and why? Like how contracts will adopt or change their policy, like plus 10 or minus 10?
Oh, actually, I think this also depends on the season of the year, because in the like prior to high season, at that time, if the ticket price of our ticket is low, many people will buy. Like if you want to travel in the end of the year, at like the month 6, which if we like imagine is the low season, at that time many people may buy the ticket, buy the ticket. So at that time, I think that the unearned revenue should be increased on the lower season, that people buy more, but they still not buy. But at the time that we have to provide a service, especially on the very high season that have many passengers, at that time, I think that the company can see more of the decreasing in the unearned revenue, but we can recognize more revenue on those times. So I think the policy, the price change of the ticket, if we dump it down, it will likely to increase the unearned revenue. Yeah, and the service provide. I think the time is very important for your question.
But if you say that they will change the policy seasonally, then wouldn't it be like inconsistent in the annual report?
Can you repeat your question again?
Like you say, they should like maybe increase the policy in the low season, right? But if they use inconsistent policy, wouldn't it like affect how they report in the annual report?
The unearned revenue actually is just the way that you want to recognize the how like recognize the money that you get from your customer. So it's just the policy. It won't change. The fluctuation of the unearned revenue. It's something like if you imagine if you selling clothes, this thing is like the clothes that you purchase. Sometimes in the high season, when people have more money, like if we don't think of the year but think of the month, like in the end of the month, that people have more money because they get their paycheck, they may come in and buy more clothes, and at that time, those stocks may like go down because people come to buy. We just but in that case we already recognize the revenue. But unearned revenue that we have to provide the service for the others. It's kind of that. It's not like the change in policy. There won't be the change in policy. It's just the fluctuation of the money, fluctuation of the numbers. Yes.
Regarding the accounting policies, do you think Kansas has more like aggressive or conservative?
Pardon?
For like the accounting policies, do you say it's a conservative practice, but it's also a practice that is very standard in the airline industry? Because if we don't do it this way and we record it like as soon as the customer has the ticket and we record it as a revenue instead, that it will be hard to estimate the sales and allowance that like customer might return or not buy, so we can provide them the service, and yeah, it will be pretty difficult estimate, so we would say this is a very conservative.
And also it have a benefit for the company, because if we just recognize it instantly, it will go into the revenue, and then we may have to pay more tax. But we still like if we use this, we may need to pay tax the next year. But if we just like recognize it immediately, we may have to pay tax now. So we may need to keep more cash, something like that. So this is both conservative, better for estimation, and also better for company managers to manage stuff in the airline industry.
And also it would be practice that would provide cash flow for the company, but in which this cash flow, the company can use this cash to reinvest for maybe improve their service. So we would say that there's a practice that is substantial for this type of company. Yeah.
So what was the group?
Pepsi.
Thank you, guys. Okay, next group. Yeah, I don't want to say this name. I feel shy. Okay, let's keep it short. Okay. Yeah, it's like 50 minutes, right?
So we're from Sunday in Sarajevo.
Just a quick clarification a bit. Our presentation might be a bit different from other teams since we read the question wrongly a bit. So yeah, but yeah, it's
Okay, so let's start with the first question. So the accounting policy we chose to get adjusted is depreciation. This is mainly because the depreciation of aircraft and engines that Qantas is currently utilized is a little bit aggressive compared to its rivals like Airline. So as you can see in the slide,
the depreciation period of aircraft and engines of Qantas are between 2.5 to 20 years, with 0 to 10% residual value, while those of Singapore Airlines are 15 to 20 years, and a residual value of 5 to 10% respectively. So it's a little bit, it's quite different, and we think we want to see the effect of adjusting the depreciation. So we adjusted it down by 10%, and next will be the effects of it on the financial statements. Okay, so now if we adjust depreciation and amortization down by 10%, the original $1.528 billion will be changed to $1.3752 billion. Slide please. The follow-through effect on the balance sheet will be as follows. The net value of aircraft and engines will be increased by $152.8 million. And due to its increased income before tax, the deferred tax liability will be increased by tax rate times $152.8 million. And retained earnings will be increased by 1 minus tax rate and times $152.8 million. On the income statement, the 10% reduction in depreciation will increase the income before tax by $152.8 million. Thus, its tax expense will soar by tax rate times $152.8 million. And the net income, please go back, please. And the net income will also increase by 1 minus tax rate times $152.8 million. And lastly, on the cash flow statement, there will be no effect on net cash from operating activities. Okay, so next for the second question, the task is for us to identify economic policies on the current financial statement that should be closely monitored by the company's audit and analysis. In order to do so, we have first identify our positives and limitations. At this point, we have limited accounting knowledge. Some policies are already applied in this case, and some are not applicable, and some are frankly beyond our knowledge. So with these constraints in mind, we list about what we learned and whether or not it can be applied. So revenue recognition and earned revenue and foreign currency effects are not possible because they are already mentioned in the case. We have also considered sale allowance. However, it is not applicable to this case. And lastly, we suspected if the company is using LIFO system, if so, we can change it to FIFO to comply with the IFRS standard. However, the company is already implementing a first-in, first-out system. So after consideration, our group picked 2 policies to implement: account receivable allowance and asset disposal. Okay, so for the first, the trade receivables of the company. As you can see in 2019, they have trade receivable which past due for like 121 days or more for about 16 million, and compared to the 2020, in 2020 they have like more than about 20 million more. So it's quite reasonable for them to like have the provision for economic loss like higher in 2020 compared to the 2019. On the contrary, the information shown on in the year of 2020 and 2021 shows the different pattern. It is shown that Qantas has estimated its allowance to $6 million, equally to the number of trade receivables passing through 121 days. So it's equal. So next slide, please. Therefore, when comparing provisions of impairment losses of 2019 and 2020 with the 2020 and 2021, the ratio of provision to trade receivable increased from around 0.3 in 2019, 2020 to 1 in 2021. So our analysis is that the company wants to increase the amount of provision to be more pessimistic to respond to the COVID-19 pandemic.
Okay, we looking at the asset disposal of campus. So as you can see, this is the information on net of disposal of campus from 2019 to 2021, and you can see that these are all three losses ranging from -7 to -245. And this is a rare sight to behold. The reason why the losses are so unusual is because of how aggressive campus has been with its users of its asset. Looking at our simulated model here, we can see that the useful life of campus asset is compared to other airlines is very much shorter on average compared to other airlines that are not aggressive. Because campus has been heavily using its asset like this for quite some time. Now, with shorter lifespan comes with larger depreciation per period, which causes lower book value in general and thus higher gain on disposal. In a controlled circumstances where we have 100% historical value and we have 60%-ish fair value from the historical value, we can see that most of the other airlines that are non-aggressive have been seen a lot, where Qantas has been seeing a gain. And from this model, we can see that it is theoretically very difficult for Qantas to be undergoing the loss in asset disposal. And the reason why I will be explained by Mr. Chen.
Okay. And that's why we have tried to trying other decision methods with an assumption that if Qantas were to be aggressive in their use of PPE, then they might use their PPE more during their first year useful life, or then later in their last year useful life. And in this case, as you can see, in this graph, we are projecting the book value of a assumed PPE with a useful life of 11 years. And as you can see here, that we try to apply double declining balance method and also some of the year depreciation method instead of straight line method. Because on the annual report, Qantas were using this straight line depreciation method instead. And as you can see here, if Qantas were to dispose this actual method before year 9, and if you use straight line method, its book value will be higher compared to double declining balance and some of the year depreciation method. In this case, it will record a pretty high book value and might use the loss or disposal of assets. As a result, if Qantas were to apply DDP or SYD instead, this would reduce the trivialization effect by the using of the straight line method. So as an analyst, we might recommend them to find other methods instead to reflect how efficient they are. But after all, our assumption might be wrong. That's why Mr. Kanisha will be presenting on other factors that might affect our analysis.
Okay, so however, the problem might not be related to the accounting system at all, but instead, our another analysis suggests that the reason for COVID-19 pandemic is also at play in making a loss at point of asset disposal. So the most interesting nature of the pandemic is that it causes an economic shock in the affected area. An example being an economic stagnation as well as any great outlook to the industry. Such incidents generally result in the decline in purchasing power of goods and services, forcing others to dispose of their assets at a lower price. Naturally, with inflation in the future, the fair value of funds under disposal would eventually plummet and also cause a net loss in the sale of assets. After all, the cost for the net loss is for the sales of assets may follow either one of our analysis, both or none at all. However, it should be the fact that this is the correct feature of funds under disposal, and these two analyses are our indicated assumption of what might have transpired. And that's all for our presentation. Thank you for your attention.
Okay, that was very
감사합니다.
Sometimes if they're only 100% available, if they're very aggressive, they maintain the booking for 120. Like 20% more. I think a power is in fact. The revenue
To be honest with you, we go through the annual report of we didn't found the keyword overbooking on the annual report. However, if based on our current analysis right now, then I still believe that the way they recognize the revenue would be that when the customer book, they might recognize it as under revenue, right? Because anyway, they are paying us for that ticket, although it's overbooked.
and then when this
Yeah,
extra people show up, they have to compensate these people, right? Sometimes they take $20. Does it mean that when they show up, it suddenly will become 10? Like, or like, also,
in the case where there is not enough seats, right? I would say then that's revenue going to something else. Like it could be an expense, like we find expense because we couldn't sell them, and it would be costly.
so anyone, so anything about overbooking?
I have a guess. If it like if they show up in your care and they and we don't have to for them, maybe the company have like exchange into like other flight in the future and maybe give some bonuses to them into their like mile, or even if we have to like return the money to them, I don't think that it would affect many things much because even the cash increase, the liability also increase, or it's like go back to the normal state in like even if they're not booked our flight in the same state.
Yeah, my guess is that I don't know, but my guess is that they probably have some method to estimate at the day of booking. Like how much of the break and how much of the material. Important to like match the revenue, right? When they match the so I also don't know like how we have to consult anyway, we will pick up one and next one. Have time for one more today, unless you want to go home.
Yeah.